A new home is even more of a challenge right
It
now.
sure is. Mortgage rates are soaring. The Federal Reserve's also expected to raise interest rates even more next month. WMR 2 News' Mark Roper is live right now in Baltimore City's Federal Hill neighborhood. So, Mark, what does it all mean for potential home buyers?
Good morning, Christian and Megan. Well, the housing market nationwide is in short supply, and a low supply and high demand means increasing prices for those houses. When you combine that with rising mortgage rates, buyers can expect to pay a lot more for their house if they can find one.
The spring home buying season is here, and home buyers have a lot on their minds, from finding their dream house and perfect neighborhood to affordable mortgage payments and rising interest rates.
I think the greatest concern that I have for buyers in the market right now is the pressure that they're feeling to make a quick decision. So, whether that's because the news about interest rates is pushing them to think about making a purchase sooner than they might be ready, or whether it's the news about the competitive nature of the market, it really encouraging them to spend more than they can afford.
Live Baltimore Executive Director Annie Milley works to promote home buying in Baltimore City.
Our median home price right now sits at $200,000. So a buyer who is going to be purchasing that priced home is going to be making somewhere between a 3% and a 20% down payment. So they'll probably be looking to mortgage between 160,000 and 190,000.
According to officials with the Federal Home Loan Mortgage Corporation, known as Freddie Mac, mortgage rates continue to climb. The interest rate on a 30-year fixed-rate mortgage hit 4.67% on March 31st. That's nearly a 47% jump from 3.18% a year ago. Between inflation and the Federal Reserve looking at raising interest rates, finance experts believe mortgage rates could soon hit 5% or higher.
We like to help our buyers think about what's the monthly payment that they're comfortable with, and then encourage them to seek out skilled mortgage professionals who are going to really work with them to put together a loan that's going to get them to that monthly payment.
And just how much of an impact could rising rates have on your monthly payment? Buying a $200,000 house with 3% down at last year's mortgage rate of 3.18%. Estimating taxes and insurance, the monthly payment would have been $1,424. At the current rate of 4.67%, the monthly payment is now $1,590. And if mortgage rates reach 5%, the monthly payment jumps to $1,628. That's $200 more a month than what a buyer would have paid a year ago.
So a higher interest rate is going to have more of an impact on a buyer who's planning to stay in that home for the entire duration of the loan term. So if you're going to stay in your house for 30 years, that interest rate is more important than if you're going to stay in your house for 5 to 10 years.
And there's another factor facing buyers trying to budget their money.
The bigger issue that buyers are going to be facing is the fact that home values have been going up. So what people have been spending on homes is increasing. That is more driven by the demand in the market.
But for people in the market for a new home, especially first-time home buyers with a lot of questions, the residential nonprofit Live Baltimore can help ease the burden.
We're a one-stop shop of information about down payment and closing cost incentives and also tax credit programs. So we can really help those who come and work with us to maximize the affordability of their home in Baltimore City.
Now, these numbers are just examples. If you have the extra money, you can put more money down for a larger down payment, which will lower your monthly payment. And you can play around with the numbers. Freddie Mac has several mortgage calculators on its website. You can plug in the numbers and see what situation works best for you. And even though, yes, mortgage rates are climbing a lot higher than what they were a year ago at 4.67% now, it's nothing like what they were compared to in the 1980s when mortgage rates hit 18.63% in October of 1981. Reporting live in Federal Hill, Mark Roper, WMER 2 News.
And of course, Mark, there's a lot of condos in Baltimore for sale. What if people are looking at those?
Yeah, Christian, condos actually carry a slightly higher mortgage rate, about a quarter point higher than what you would pay for a house. And a lot of people are looking at condos because they're looking at the price of houses going up, so they think about getting a condo. All that demand for condos is also driving up the price of condos. And according to Redfin, here in Baltimore, condos are selling within 26 days, 60% sell in 2 weeks, and 40% are selling higher than the asking price.